Colleagues, we heard in committee and we heard again on the floor today that this bill is not needed because Oregon has a robust regulatory regime. And if there is a problem with an insurance company, a consumer can reach out to the Division of Financial Regulation and they will take care of it for them. At the same time, we continue to hear stories year after year about Oregonians who are struggling with misconduct by insurance companies. We heard in our committee, we received testimony about a family that Rep. Fragola talked about, who had a tree fall through their roof and fought with an insurance company for 2 years to get their home repaired. There was testimony about a man who was in an auto collision, suffered a broken neck, and was hospitalized. And while he was in the hospital, an insurance adjuster came to his bedside while his family was gone and was pressuring him to settle his case. And they told him that the most he was going to get was $3,500. We heard from a local body shop owner who says that his shops are routinely pressured to do cut rate repairs and by using unsafe parts, and his customers are forced to pay thousands of dollars out of pocket to ensure that their vehicles are repaired properly and safely. So how do we reconcile those two things? How can Oregon have a robust regulatory regime and yet these stories still be happening in our communities year after year? The problem is that DFR is a regulatory agency, and they operate with two significant limitations. The first is their legal jurisdiction. They are able to take action when they have found that an insurance company has violated the policy and has committed an error. If you look on their website, examples of errors include not issuing a refund, failing to issue a policy after receiving payment, or improperly closing a claim. That is the limit of what they're able to do. The problems that we're hearing about are not errors by insurance companies. They're not mistakes. They're tactics designed to delay, defend, and wear people down until they will accept whatever the insurance company is offering them. That's their business model. The second limitation that DFR is operating under is resources. They have 3 investigators and 4 enforcement officers, 7 people, to police the entire insurance industry in the state of Oregon. Now, last year alone, just DFR received 14,000 insurance-related complaints. That's about 38 per day. And they had 7 people. It's no surprise then that they are able to take action in only about 16% of cases that they get. Now, DFR is a fine agency. They do really good work for the people of Oregon within the confines of what they're able to do, but they do not have the legal jurisdiction, the personnel, or the resources to properly police these multi-billion-dollar companies. That is why this bill is needed. In light of this fact, we have 3 options. The first is we can look the other way, continue to ignore the problem as it gets worse and worse. 2, we could dramatically expand the power and resources of DFR, which our state simply cannot afford to do. And to quote Ronald Reagan, in this crisis, more government is not the answer. Or 3, we can empower consumers to stand up for themselves. Not by relying on a state agency for salvation, not by having to reach out to a bureaucrat in Salem when they need help, but by allowing them to file a complaint in their local community. And trusting that if a wrong has been committed by an insurance company, that their fellow community members can hold that insurance company accountable. Those are rights that are guaranteed both in Oregon's Constitution and in the United States Constitution. And there might be people, Madam Speaker, in this room who say, well, that all sounds fine, sounds very American, but I'm concerned about frivolous lawsuits. What if people go to court and cram our dockets full? That's going to create issues. Well, first I would say, in terms of frivolous lawsuits, those are going to be discovered by the Oregonians sitting in our courthouses. So I would ask folks to trust in the judgment and the common sense of the Oregonians sitting on our juries. But if that's not enough, there are safeguards built into the system to prevent those things from happening. First, consumers filing a frivolous lawsuit can be liable for the insurance company's legal fees. Second, an attorney who files a frivolous lawsuit can be sued for malpractice, can also be sanctioned by the Oregon State Bar, can have their license suspended or even revoked. These are huge disincentives to file frivolous cases. That is why the UTPA is a cornerstone of our consumer protection and why it functions to protect consumers across the board when they are dealing with any other industry other than insurance companies. We are not inventing anything new here. We are merely using one law to give teeth to another law. Our insurance code, as you've heard, sets standards for how insurance companies are supposed to treat their customers. These are standards they should already be following today. But those statutes can only be enforced by DFR. The UTPA is the cornerstone consumer protection statute that empowers consumers to stand up for themselves and creates consequences when businesses lie, cheat, or steal from their customers. This bill merely states that an insurance company that violates the provisions of our existing insurance code can be held accountable by their own customers under the UTPA. If an insurance company tells you that by passing this bill, they are going to suffer so many financial losses and get sued so often that they're going to have to raise everybody's premiums, the natural follow-up question to them should be, how often are you planning to break the law? If they are following the provisions of the insurance code, they have nothing to fear. The extent of their alarm is the measure of their guilt. But I don't think it's going to come to that. This bill is going to stop the bad behavior from happening at the outset. Currently, insurance companies have a financial incentive to take our money and hold it as long as they possibly can. There's a term for it. It's called float. Warren Buffett brags about it. It's how his company made a lot of money. So, is there any wonder why insurance companies are delaying these claims as long as possible until they're forced to pay out? If this bill passes for the first time, they can face real consequences if they continue to do that to Oregonians. And in the end, this bill does nothing more than empower our constituents, sitting 12 at a time in county courthouses across our state, to hold these companies accountable if they violate our existing laws and break their promises to Oregon customers. I urge an aye vote. Thank you.